This week we're going to preview the USDA monthly supply demand report, which will be released on Friday, August 12th. We're also going to take a look at the history of crop condition ratings and as it relates to yields, and we're going to take a look at short-term weather trends. Hi, this is Brian Basting with Advanced Trading. Let's talk about the corn market. We've moved into the middle of August here, and that means it's time for the USDA monthly supply demand report. This is a very important report because it will give us a first survey-based estimate of U.S. yields. Let's take a look at the trade estimates for that report. Again, this report will be out on Friday morning at 11 a.m. Central Time. Now there's a lot of numbers here, from crop production to national average yield, ending stocks. I'd encourage you to stop the video and review those at your leisure, but I want to highlight one important number. That's the ending stocks for new crop. That will incorporate the crop size. It will incorporate yields. It will incorporate demand factors. Take a look at that ending stocks number for 22-23. Last month it was 1470. The average trade estimate is 1407. Again, take a look at that number for Friday's report. But here's the key message. Have your risk management strategy in place by working closely with your trusted risk management advisor prior to the release of the report. Let's move on now and look at crop condition ratings for the U.S. Our weekly map here looks at the change in the good excellent ratings for individual states. A lot of red this week implies deterioration in good excellent. Overall, nationwide, from 61% last week to 58% good to excellent. Notice last year was 64%. We did see some improvement in Illinois, Ohio, Indiana, but for the vast majority of those states, particularly west of the Mississippi River, we did see some decline. Now let's spend a moment here looking at the relationship between the crop condition index and yields. Notice this year's index is now at a season low in that dark blue line. What we want to take a moment to highlight here, though, is in 2018, the final yield was 176.4. That's that purple line. Now moving forward to 2019, notice that the yield did decline to 167.5, and notice the crop condition index was notably lower that year. But look at last year, the red line. The crop condition index was higher than 2019, but it was actually lower than 2018, but the yield was a record yield. Here's a key message as we wrap things up. We simply don't know what the yield will be in 2022. We've got the impact of technology, farming practices, a lot of different variables here that will make up this final yield. So again, be prepared for price to be unpredictable over the next 6 weeks as this final yield is determined. Now let's look briefly at crop progress here. Crop in the dough stage is at 45%. On average, it increases about 30% over the next 2 weeks. So we'll be approaching 75 to 80% by the 21st. Let's turn our attention to weather now. Let's take a look at the short-term weather forecast. Our slides, as usual, are courtesy of T-Storm Weather. We're starting out here looking at a pattern that's been in place for a bit here, where the southerly winds come up from the southwest and expand the heat. But northerly winds come down and actually contract that heat. So really we're looking at kind of a battle, if you will. The west has been warm and the east has been cool. Now if we extend that into the next 7 days, that pattern is likely to persist. Looking at warmer temperatures here in the west, as we move further east, normal and then getting cool. What about rainfall? We're looking at August 11th to the 16th. This green area would be the best chance for some increased rainfall over that time period. The red box is important. That would be the area that would be most beneficial if it would rain in that area. Some dryness really has increased in that area. Wrap things up the next 2 weeks. Look at those red areas here below normal. As we move further east, it is looking to be normal. And a little bit south of that, actually a bit wet. Let's wrap things up this week looking briefly at trends in December corn futures. Now we got December corn here as we tape on Tuesday, trading about $6.15 a bushel. While that's down from that spring high, again over $7.50 back in May, it's still $2.05 above the 5-year average. We strongly encourage you, with all the uncertainty in the market, to continue to work with closely with your trusted risk management advisor to defend your balance sheet. Now, if you'd like more information, please feel free to contact us at 664-2321. We'll put you in contact with one of our risk management consultants. We'll be happy to visit with you at your convenience. And remember, we upload every Wednesday. Make sure to subscribe to our channel to never miss an upload. And remember, you can catch us on Friday on YouTube at 11:20 a.m. Central Time for a live recap of the August 12th report. Have a good week.